I'm Chantal Roberts, and I'm a nationally recognized insurance thought leader regarding insurance claims handling standards, practices, and procedures. Today on The Art of Adjusting, we're discussing certificates of insurance or certificates of coverage. That's a topic that can make the most affable person all riled up. So, what is a certificate of insurance, which can be also abbreviated as COI? A certificate of insurance is a statement of liability coverage issued by the insurer. It's generally for business purposes and provides a summary of the business's or the insured's business coverage. It serves as a verification that the insured's business is insured. Potential clients may request a certificate of insurance if there is a concern that there could be significant losses. This is a method to require a contractor or subcontractor to carry insurance as well. The insurance client usually requests one as a condition of doing business with the insured. So, why do certificates of insurance get people fired up? The certificate of insurance, while it shows that the insured had coverage at the time that the certificate was issued, may not be worth the paper that it's written on. It could be totally useless if the insured or the insurer has canceled coverage immediately after the issuance. So let's go over a couple of things here, and I am going to try to share my screen with you so that you can see what one looks like. So over here, we have the producer or the agent. Here's the insured right here. And this will say who the insurance company is. It'll also go down and talk about what the type of coverages are. Here's general liability, here's workers' compensation. We also have the amounts of coverage right over here. And right down here, it'll say certificate holder in the bottom, and that should have your name if you're requesting their certificate of insurance. Now, the issue is, again, that this piece of paper may not be worth the paper that it is written on because there are a lot of disclaimers on the certificate of insurance. Right here, it says that it's only for information, and it's not a way to confirm coverage. In fact, down here, it also says that it's been issued to the insured, notwithstanding any of the requirements, terms, or conditions, and it's described herein, exclusions, conditions, blah, blah, blah. But the thing is that you don't know what kind of conditions or exclusions or conditions, because nowhere on here is the policy form or any of the endorsements. It says right here, important, that if you as the certificate holder want to be named as the additional named insured, you need to make sure that the policy is endorsed. Just because you have this piece of paper does not mean that you are an additional named insured. Now, one way to make sure that your certificate of insurance or certificate of coverage shows a little bit more coverage and may stand up in court if you have to sue someone is to put in the description of operations to make sure that it's agreed and understood that, you know, this person here is an additional named insured, even if the agent or retail agent didn't make that endorsement. The more information you can have on this certificate of liability coverage, the better you will be in getting it to stand up in court if that's what you have to do. Now, another thing you should verify is when you get this piece of paper from your contractor or your subcontractor, you should go ahead and call the agent or the at fault carrier to make sure, well, they're not really at fault yet, but you should call the agent to make sure that the coverages are still applicable. If you are an adjuster and you're handling the insured's claim who happens to have a subcontractor, you should notify the agent or the at fault carrier of your intent to subrogate. Now, that is a lot to unpack here with the certificate of insurance, and it's impossible to go over all of it here and keep this to be a short vlog. But I've discussed some of the certificate of insurance drawbacks and what you should do if you receive one, both as a layperson and as an adjuster, what you should be paying attention to. Every claim is different, and every insurer has different protocols for handling losses. However, this being in the litigated world that we are in, see below for some legalese. Few claims go to a jury trial, and picking the expert who has been deposed the most or who's gone to trial the most may not be the correct expert. Failing to have a second set of eyes on the claim in order to save some expenses isn't always the best way to resolve a loss. As an expert witness and a former claims adjuster, I'm sharing my experiences in the art of adjusting. Thanks for watching. I appreciate your time.